Where'd I put my hat? We'll put it on this one. Oh, fuck, I'm gonna use. Alrighty, so let's start this shit. Yo, what up, Donnie Plan? Yo, you want me to hop in disc? I'm in. But I'm looking to buy US30. I'm looking to buy gold. We'll get to the breakdowns here in a moment. But I mean, it's just like daily candle extremely bullish yesterday, nice bullish closure. I'm expecting more of a pullback. If you look at the we have Powell testifying at 9:10 a.m. so right before the NYSE open. So we should see some volume here today on our USD pairs. It looks like we've been kind of sleeping all night. We've been in this range. I do actually have a buy from here, but I wasn't here on the stream to take it, so we won't count it. And I'm looking to stack a couple entries on here today. So that's what I'm looking to see. Good morning, Augie. But so looks like this daily candle or this 4-hour candle, we had this one give us a nice pullback. It looks like this one's driving up bullish here, despite this nasty ass pullback we just got. Interesting. News, breaking news. European financing rate. Okay, looks like it was just a nice liquidity grab the downside. Shit. Yeah, so I'm expecting this shit to juice today, bro. Yo, what up, Jimmy? Good to see you here, bro. Gold, same deal. I need a candle to close above for gold. Right, it's like really chalked right now. So like we've got here, if you look at gold, we'll do the higher time frame thing I like to do here, right? So it's like, boom, what do you have? We had a nice bullish day yesterday. They came and closed above this resistance. So then what do you have? Clean traffic up into here. Right, so what we want to expect is for this daily candle to dry back up into here and hit 1735. That's my target for the day for gold. Right, pretty clean traffic. Once we get up through this area here, you know, price is trying to break right now. We have a very weak DXY. DXY is looking like it wants to pull back into these highs over here on the 108. So we already know that when we have a weak DXY, our asset classes like gold and US30 and everything are looking to melt, or they'll go up. If we have a weak dollar, asset classes will move up. Right. So then we have USD JPY, which is also looking to make a pullback to the downside. So yeah, what else we have? GJ, kind of choppy, but I will say if we close above here, once we see some volume start to kick in, right now it's just like really ugly price action, then maybe we could look for buys, but only if this 4-hour candle can close bullish above this support here. So that way we can expect the next one to go like this. Give me a second. And then retest the top of the range. Say it were to open here like this. If we were to close like this, right? Or if we close below, then there's a high probability that this one's wick will get filled into the downside and GJ will drive down today. We did hit this resistance up here, so there is a potential for a pullback and a move into the downside, probably down into like 164 out, I believe. But we still have a lot of time before that happens. But this is just like what I kind of want to see GJ do. This weekly candle. So like what I think will happen is, so you'll see this weekly candle go up like this for GJ. And then so it looks like how it looks right now, right? But then as we hit this resistance here, and we're gonna get some bearish daily candles to pull back. Let me go to here. Then you're gonna see this weekly candle. It's just gonna drive down. Let's go like this, right? But it's gonna make a bigger top wick, and then next, and so then what this will look like on the daily time frame is, obviously we had those two extremely bullish days. Here, let me go like this that way. Right, but we had those two extremely bullish days. This would be the first day. And then, what, this was yesterday. And then it drove up. Bear with me here. Well, I tried to do this for you. And then, today's candle looks like, well, could look like this. But I need it bearish. Pisses me off that these are off center, bearish. And then tomorrow we could close bearish as well. But then all this is on the higher time frame is that one weekly candle we see right here, right? Oh, I forgot a day. Okay, so yeah, we had this day as well here. Fuck, hold on a second. Dude, this shit's taking forever to do. Baby, hold on. Alright, so you get the point. So this is the weekly candle here, right? It's going to make a nice wick. And then on a daily time frame, what you'll see is this nice move up here. Then you'll have these candles coming down. And then when the new weekly candle starts, let me move this over here. What we should do is just pop down, make a nice little bottom wick, but then ultimately drive back up and fill this previous candle's wick, moving back into the upside. Bro, come on. Like this. And then all you'll see here is on the daily time frame, daily candle goes up, creates support, and then we can continue driving. Right? That's all it is, like the price action here. Make sense? Make sense? Hopefully you can kind of see what I'm trying to draw out. But this is what I see on GJ for now. So like I think the buys are done for the week, right? We've already juiced so much, like what, 300 something, 400 something pips for the week. Top to bottom, this weekly candle's 560 pips. So like, I mean, we need to pull back a little bit. So I'm assuming that that's what today and tomorrow will be for GJ, and nothing exciting at all. Yeah, so we'll see. But I'm just kind of gonna be watching US30. Very interesting here, bro. It looks like price doesn't want to break out of this range until Powell testifies. But what's up with everyone this morning? Volume getting a little ridiculous. Look at these 1 minute candles, bro. DP, this was your entry. Nothing, dude. Been trying to learn how to play League. Dude, League's goated. How about me? Dude, non-stop fucking grinding. It's like, it's insane, dude. I can't wait to go to bed. Like, I just want to take a fucking nap. I just want to take a nap. Fuck, I'm gonna have to redraw all these. Okay, I forgot to. Okay, boom. So we got support, and then I'm gonna say resistance is here. 1 hour, 30-minute. See, gold looks like it might keep moving down, depending on how these candles close. This 5-minute keeps flying up though, then there's a good chance that maybe we'll start moving up on gold. We're still respecting that bear or that bullish intraday market structure to the upside. Dude, US30 be on X Games mode. Yo, I'm about to play like chess or something while we wait. Get the fuck out of here. How do I lose? I got checkmated, bro. I can't move this here or take his thing. I don't understand this fucking game sometimes. Alright, new one. Run it back. Oh, this guy's got a sack, dude. Dude's bringing the horse out first. Dude came to fucking play. Watch this. I could play my horse here, and if he doesn't bring a pawn up, bro, I'm grabbing his fucking thing. Alright, cool. We got a nice bearish closure here. Or bullish. What the fuck? This dude for real gonna pull his king out? Dude, what's the move here? Fuck it. He's gonna take it though. What'd I tell you, bro? Wait a minute, I got a plan, boys. You don't even know the rules of this game yet, me either. Oh look, I fucking suck. Oh, he's quick to make that play, bro. I'm gonna lose this thing. Why did I not move it back? Oh my god, he's stupid! Dude, holy shit. I can't make that move. He'll take it with his pawn. I'm about to beat this dude. Juice, US30 juice. I want to see this thing move up today, bro. Dude, oh my god, I am about to cook this dude, bro. I'm gonna need that king, boy. Or that queen, boy. Look at that gold 4 hour. Yeah, what'd he do? Hey, resign. Easy dubs. Go next. Who's first? Me? WWW, hell yeah, for the chest, baby. Wait, no, I'm good. I thought his queen could go. No, we schmounting? Double bottom on the 1 minute? Dude, this guy's nervous. Let's see. I think gold will be better on this next 4 hour, because if we close bullish on this one, then we can definitely anticipate this wick to get filled to the upside. But like, we'll need this 1 hour to close first, so that then the next one could be our bullish candle that moves back up. Like this. To fill the wick. Come on, bro. Is this guy gonna play? God damn. I think Buddy gave up. Naz is bleeding. This guy's like trying to wait for me to quit. He be on fucking bullshit. I'm roasting him. What country is he from? Spain. Two es malo chess. That means he's bad at chess. Holy shit. Holy he finally played, bro. Now watch this. Oh, he's mad. Oh. No, US30, don't melt. See, like the way I see this is they want to pull back to here before Powell testifies for the best chance to sell. Like for you, Jay, at least. Oh shit, what can I do here? What can I do here? It's like, especially because you got no bottom wicks on this candle. Like if you're trying to sell on the 1 minute, bro, your entry's like right here. Bro, what the fuck is this guy trying to do? He castled up. About to start pushing pawns to his side of the board, bro. Respect. This thing never broke 4-hour lows yet. It could come back up. It could also fake out. It's a 15-minute candle. But like, if it closes below these bodies, I don't know. This guy's fucking trolling, dude. Go up, buddy. You don't have no top weight. He disconnected. Okay. 2 dubs back to back. I'm getting good. Alright, perfect. Perfect. Is Nas coming back up? Gold should be coming back up too. Nice. Yo, my 1 minute warriors. This is your entry for gold. JK, not yet. We need to see how this 4-hour closes. Dude, what the hell is this like Velcro ripping noise in this shit I'm listening to, bro? Damn chocolate milk be hitting, bro. Yo, look at that USD JPY shit. I was just saying, you would want to sell from here. Look at that shit. God damn. Look at our DXY too. Right, you can see it, that shit pulled back. That's why we started seeing US30 move down for the time being and gold move down. If this thing returns to moving bearish as it should, then we can definitely anticipate gold to move up, US30 to move down, or US30 move up, gold to move up. Yo, Mr. Rofik, what up? Which one do you plan on taking? So it depends. I kind of like gold. I feel like gold looks good. As long as the 4-hour can close at least bullish. Alright, let's see this thing drop back up now. Came down to give that shit a bottom wick on the 5-minute to correct this candle. insane. Yeah, I have no idea what the hell you just said. I don't speak that language. Alright, boom. Crazy, bro. This shit happens all at the last second. Alright, well, I will say, if gold closes below here, then, I mean, we're in for the sells, bro. But I'm gonna have to wait, though, for the first 10 minutes of the open. Translate? How about you translate it, buddy? You speak English, clearly. Don't come and play games with me, bro. So we got like 17 seconds. Look at that. Okay, so gold closed above still, but still closed bearish. So let's just wait and see, honestly, so far. Dude, why did my music stop playing, bro? This dog wash ass thing. Alright, one more 5-minute candle. We're gonna see what's really happening today in the market. Oh my go here. Right, so I really want to take these UJ buys on this 4-hour moving back up, but I want to wait for this news to come out first. It comes out in like 1 minute. Let's see, let's see. I think I might just put a buy stop in, but I'm gonna give it a little bit of room so it doesn't get triggered right away. And then I'll keep the stop loss below this candle for like, it'll be like 20 pips. Right, but this is just like a trade based off of the 4 hour. See, I'm about to get tapped in. Alright, I'm in. Alright, so I'm in these UJ buys. Stop loss like 20 pips. Let's see what happens, boys. But it's like our first target will be here, and then we'll go break even. And then our full target's up here for like 66. Should have seen it last night. I was gone. Why? What did this dude? What's this dude even saying? Where can I watch this at? Here we go.
It is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. You know, that speech, the point really
Beautiful.
was
We're up like 7 pips.
a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was
I'm gonna keep refreshing it because the key points here are
to your question.
These
really
whenever these come out.
Has and accepts responsibility for price stability, by which we mean 2% inflation over time. That again,
we're about 8 pips, 9 pips,
inflation remains well above target.
10 pips. All right, so look,
public does begin to see
I'm gonna go break even here, and then I'm gonna secure about.
To really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely.
Hold on, I'm gonna wait for it to hit this.
I can assure you that my colleagues and I are strongly committed.
All right, boom, 15 pips.
To this project.
All right, 17 pips. I'm gonna close half
until the job is done. I can also assure you that we never take into consideration external political considerations. You know, we are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not we focus solely on the goals that Congress has given us, and that's what we're going to do here.
WWWWs.
I think
Right,
that's
but like I want to see
absolutely
this thing keep
right.
driving though. I want to see this 4 hour. I want to see us retest these highs if we're gonna keep
Clear that we could
like this
see,
daily candle can
you know,
come up and fill
political
this wick,
pressure
bro.
coming to avoid economic costs when there
Simple.
could be
Sorry,
concerns
we
from the
it took a
public
little
that
while, but
there's,
we got our
you know,
trade, boys.
inflation is bound to
Hopefully we can see
rise
this
in
15-minute candle close above here.
is. Jim mentioned in his opening remarks that 2 years ago you moved to a new framework, flexible average inflation targeting, and I'm bringing this up now because
All right,
again,
cool.
we see
So
the
this
internet
15
end
is
up trying to
gonna
sleep
close
every
above.
night. You know, by many accounts, this
Little
move has
bottom wick.
created
If this
more
thing goes up and breaks the
uncertainty
high, we
than
should be in the
was
eat, boys.
Jim mentioned. And coming at a
I'm up 20
time when
pips right now.
inflation now is increasing markedly, it creates concern that despite your stated resolve, the commitment to price stability has become less strong. You know, should you consider modifications to this framework to assuage these concerns and better manage short-term expectations?
So the framework, we began the work on the new framework in 2018, and we announced the
Anybody get
results in
these
August of
buys?
2020. And it really followed 25 years, basically,
Let's
of
get it, yes sir.
global disinflationary forces. And the problem was that monetary policy rates were close to the effective lower bound much too much of the time, much too close, and even during good times. So that meant that central banks were having a hard time all over the world, you know, finding ways to support the economy when it was needed. And that's why central banks, including the Fed, resorted to things like forward guidance and asset purchases. So that's why we did that. But the changes that we made were sort of a very
Let's see.
mainstream
Like I
part
think Nas might
of a
tap back into
literature
here
and
and then
makeup strategies.
drop down. We'll see
But
though.
really, the point of our framework changes, the point of all of them, was to, and we said this very clearly, was to have inflation expectations well
They
anchored
kind
at
of just be
2%.
talking bullshit
That
right now.
the average inflation targeting idea was meant to support having inflation expectations. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And you know, as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses, and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short term expectations are higher because of high current inflation, and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
No,
It
they
seems
ain't.
to me there's a chance that there's a real risk that the labor market that the labor shortages persist. Does that create a risk that takes some of the ability to manage this process out of your hands? To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging
Yo,
world for
Lidl.
companies, and
What up,
it will
fam?
certainly create upward pressure on wages and that sort of
Nothing's up.
thing.
Just these
Today, the labor
USD
market
JPY is going
demand
up,
is
bro.
very, very strong still in the labor market. We're still printing new payroll job numbers at a high level. Wages
Drive
are
for me.
running at elevated levels, and so we think by our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get back into better balance, and that will bring wages back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve. Um, the shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome
Close
increase in
above,
labor
close
force
above.
participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have
Why do
measures in
they
place
disable the chat now?
to
with what's in the price. I feel like most investors want to.
Less, still a full percentage
Oh,
point
this
below
one they
where it
keep it
was
open.
before the crisis, and I think it's important as a society that we have measures in place
I'm gonna
to
start ramping this chat up.
support a strong labor market and high labor force participation, and that goes beyond what we can accomplish with monetary policy.
What do we know is like gonna go? What do we know is like gonna just straight up
What's different today from the
dump?
the high inflationary period of the late 70s and early 80s? I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing
It's too
people
hard to say
actually
yet.
line up at the Fidelity office to see the
I want to hop in the
monetary
chat and start
aggregates
trolling
for
and
these
be like, "Yo,
US
buy,"
banks and see the
be like, "Sell,
and
sell
those
USD JPY now, sell, 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 sell."
dramatically since Milton Friedman
Kids do that in these chats all the time.
and everywhere a monetary phenomenon.
Pump, pump.
I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but that, when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I too, I graduated from college in 1975, which was close to peak monetarism, and there was quite a focus.
This dude graduated college in 1975, bro. Pow, you are an old fuck, bro.
So to go to this current situation, so as part of our response to the pandemic, we did resort to large asset purchases to address what were pretty severe disruptions in markets, and then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities
Come on, boy, drive for
don't
me.
actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way: whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy. And we don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that.
Buy Bitcoin, buy Bitcoin.
That's where we would be on that.
Buy. Big pump coming, big pump coming.
And so we do like to socialize and promote.
Dude, I love all these bots in the chat. Dude, half of them don't even speak fucking English.
Eliminate some of this discretion. Jim mentioned.
So Euro USD, bull. Euro USD should go down. Oh shit, it fucking is, bro.
And that kind of calls into question whether inflation and price.
God damn, look at this shit.
For monetary policy, some folks have advocated for a rules-based system, such as targeting nominal GDP, is something we've heard a lot about in recent years. Partly because, as you say, monetary policy is not suited to address, well suited to address supply shocks. Could you share with us?
Sell home. Sell home.
Something that you would consider.
So
then you got people in the chat that are clueless. BTC long question mark.
Taylor rules
Fuck no.
Part of the fabric of economic analysis, and particularly monetary policy analysis, in ways that must be far greater than John Taylor could have hoped when he wrote his original article in 1993. So, but no central bank, and the Fed has never explicitly tied our monetary policy decisions to any formula, including Taylor rules. But Taylor rules, nonetheless, are ubiquitous in all of the work that we do. You have to have a variable, or a way, a model of explaining how monetary policy will react, and some kind of Taylor rule is now very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato and is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this is a lot of well-known experts, many of them at your institution, do support nominal income targeting. And I'll just say that we've looked at that. I've looked at that and really come to the view that that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
and one thing I would interject is that we have debates internally as well, and I think for us the concept really is more wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again remove discretion.
I think that's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is, and part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's a level of complexity that even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put that, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years,
Dude, did he just say trend?
Have a very different view, but it is broadly understood. I think
trend?
Thought that trend growth has declined considerably rather, over the course of since the global financial crisis. So how do you incorporate that into a nominal income target?
This man always talking about bullshit. I only see that because it's in the
trend growth. And
what do you call it?
You're incorporating both
on the fucking on the screen on the left of the stream. It doesn't show up in the chat because you be cussing, bro.
Because we just don't know these things with that kind of.
Oh.
We don't know any of the
oh
so
shit.
With that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint.
Go up. Don't stop me out.
That we have chosen to do, or that we are currently looking at.
You mentioned the dual mandate.
Let this runner eat.
I don't want to ignore the unemployment rate during this conversation. When I said earlier that we obviously have an aversion to a fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So, Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment and price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say,
dude, this chat is wild, bro.
And have for some time, that
buy GBP USD now. Let's see what it looks like.
Which clearly changes, through the business cycle and over time.
Oh, GBP USD does look good for bonds, bro.
Assess that, and we do it
on the 1 minute.
Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
You stole my follow-up because you started out saying Congress sets the mandate, and So my follow-up was going to be, well, should the mandate, should they consider changing the mandate? And I think you've answered that. But I guess a natural follow-up might be then that, if the dual mandate weren't enough, there's been talk of adding more elements to, the Fed's objectives, including like racial equity that seem, far from the Fed's ability to address. In addition, the Fed's remit has expanded from the banking system to the broader financial system, and its regulatory responsibilities were widely expanded in the wake of the financial crisis. How does continuing expanding the Fed's mandates not undermine focus on that fundamental responsibility of monetary stability, beyond things such as the employment element of the mandate?
So I think our current mandate is appropriate, and I would not want to see it narrowed or broadened, for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue.
We might get stopped out here.
That is a precious grant of independence that lets us pursue those goals without direct political control.
Unless this thing makes its bottom wick and starts juicing it upside.
And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or of Congress. And if we do that, if we do stray from our core mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well. And I think that's pretty well documented and accepted.
I mentioned a couple of times, our concern about a fully discretionary system, and one of the biggest of those concerns is that in the face of large economic dislocations, we've been running what really amount to
go fill that wick, boy.
I would cite the quadrupling of the Fed balance sheet in the wake of the 2008 financial crisis, and then doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Could you shed some light for us on where you hope to take the balance sheet over time, and what's the way that you really try to get there? Do you see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June, once it's up to full speed. The process began in June, and the pace of the balance sheet increases, actually rises this month. The plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed.
Dude, I want to see this shit
juice,
bro.
As a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large-scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And
Oh,
again,
alright,
we
I
think
got
that
hit
the
break
current
even.
system works well and provides a lot of liquidity to the system, which is kind of a net gain.
All right, I thought it might be time to shift gears a little bit away from inflation and monetary policy. I remember the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement a digital currency. And I was kind of horrified at the privacy implications of this prospect and said so in a letter to the editor at that time. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences. But the Fed has stepped into this arena with a discussion paper on a central bank digital currency and several speeches from Fed governors. Our team has reviewed the more than 2,000 comments that the Fed's central bank digital currency discussion paper received, and we find that about 2/3 of them are concerned or outright opposed to the idea. Commenters raise concerns of financial privacy, financial oppression, and disintermediating the bank system, some of the same concerns that led me to write that letter to the editor 7 years ago. How can these serious concerns about privacy and freedom be reconciled with a digital currency?
Let me start by saying that we haven't made any decisions at all about whether to issue a CBDC, and we continue to evaluate the pros and cons and look at the technical questions and the policy questions, and we expect that evaluation process is going to take some time, appropriately so. Secondly, I'll say that we do not intend to proceed with issuance of a CBDC without clear support from both the executive branch and from Congress, ideally in the form of a specific authorizing law. So it was very gratifying, 2,000 and some comments. And, I won't tell you that I've read those, but I've read all of them, but I've read some of them and I've read the summaries. And, it's a lot of very thoughtful concerns, including the ones that you raised. And there are things that we're considering very seriously. So we in our own paper, we suggested that a CBDC in our jurisdiction should be privacy protected, intermediated, widely transferable, and identity verified. So on privacy protection, let's start with that. Very, very important. And we all see what's happening with the digital RMB. And the issues with privacy. We would not want a world in which the government sees in real time every money transfer that anyone makes with a CBDC. That would not be something that at all
So,
attractive.
I ain't gonna lie, boys. I think that's gonna be it for me today. The church just kind of be on bullshit. I mean, like, they're not on bullshit, but I don't really want to trade while these guys are still talking. And until they're done, shit's just gonna be kind of choppy. So, I think I'm gonna call it a day for now. I mean, we got our win already too, so there's really no reason for me to stay around. We'll just let the shorts play out and see what the hell happens. But I don't know. DXY is looking like it might drop, and then we'll see US30 and everything. Like, it looks like this should continue moving down, and it looks like US30 and that wants to honestly move up. But hey, we'll see. So far, there's nothing that's saying we're moving up. But I'm gonna head out. Make sure that you're subscribed to the YouTube, and then we'll be back tomorrow, and next week and every other week. And yeah, that'll be it for me.